Okay, we are live. Good evening, everybody. Did you guys miss me? I wasn't on yesterday, so last night I caught myself doing the most, trying to be in too many places at once. So I wasn't able to get on for our evening live, but I'm here today. Um, to tune in. For those of you who don't know me, my name is Tremaine Wills. I am a financial planner and investment advisor. I own a company called Mind Over Money, where we are on a mission to help 1 million households grow their invested assets to $1 million or more. We do this through creating comprehensive financial plans, giving investment advice, and teaching and promoting financial literacy through live education just like this. Um, and so, if you'd like to stay connected, be sure that you're following on whatever platform that you're watching. And if you want to make sure that you get notified when I go live, turn those notifications on, right? So, today, for our question that needs an answer, we're going to answer what is DCA. All right. And so, DCA is dollar cost averaging. I'm going to go into some detail about that. It's an investing term. So I'm going to share what that is, give a little bit of statistics about it, why it's beneficial, and we'll dive into that. So if you know anybody who could benefit from this quick lesson, share this live stream with them so they can tune in, right? Now, before I dive into it, I always like to ask, where are folks tuning in from? So if this is your first time catching the live stream, let me know in the comments where you are tuning in from. It's always cool to see people across the world catching the information, right? So, this company is based in the United States. We're in Hampton Roads, Virginia area. And so I service clients across the US, but it's always cool to see where the information travels. Okay, so we have somebody from Vegas tuning in. Welcome, welcome, tuning in from Vegas. That's dope. Hello, thank you. I was about to read that. That is not a place. But thank you very much for the compliment. All right. So if you are catching this on a replay, also let me know where you are tuned in from, so that way I can see where the information travels. All right. Before I forget, I like to share some actionable steps that you can do with the information that you get from today. If you want to tune in to my next free workshop, you can comment workshop. You'll get a link from me to register for free. Or if you don't want to hear me talk and you just want the information, you can comment PDF and you'll get the guide on what I would teach about. Right. So those are the two things that you can do. Free resources to take what you learned today to the next level. All right. So if you want to tune in live and get a deeper dive, you can comment workshop. If you're like, hey, I don't want to hear you talk no more right now, give me the PDF, comment PDF. All right. All right. So what is DCA? DCA is dollar cost averaging, also known as the constant dollar plan. It is a strategy you can use to invest. Right. And so there's also like the lump sum method. And then you also find people that are trying to like time the market, um, where you're deciding when you're going to invest dollars into the market. Jovi is asking, can we get both? Yes, you can. You can get both. Just put one of those put the PDF keyword in and you'll get a message. But yes, so what exactly is DCA, or dollar cost averaging? Here's the definition. It is investing the same amount of money into a target security at regular intervals over a certain period of time, regardless of the price. Okay, so what that means is you are not trying to decide, well, I'm gonna wait until a particular stock or investment is X price before I get in. You decide that every month or every 2 weeks or every quarter, whatever the cadence is going to be, you are going to put the same amount of money into the stock, into the security. So what that could look like could be, all right, I decide that I want to invest $500 into an S&P fund, right? So every single month, I'm going to make that same deposit of $500 into the S&P fund, no matter what the price is, all right? Because over time, the average will be taken of what my value is of when I bought those different investments. Hi, how are you doing? I'm doing great. Right now I'm teaching. So hopefully you're tuning in and learning something. We're talking about DCA, which is dollar cost averaging. It's a way to invest. All right. So when might I want to use dollar cost averaging as opposed to a lump sum investment, right? So for example, there is a cap on how much we can invest into our individual retirement accounts, right? And so at the top of the year, you might have the choice to put the entire lump sum. So let's say, you have that $6,500 available, or you might decide, okay, I want to split this out throughout the year. Dollar cost averaging would be splitting it up and investing it over the year. Depositing the lump sum would be putting that full amount at the top of the year into the account. For many people, we may not have that lump sum available. So, dollar cost averaging is going to be the easier strategy for us because as we are earning income, we can start to put the money into the investment account. All right. Now, for many people, dollar cost averaging is a way to mitigate some of the risk that comes from investing because you're developing an automated strategy where you might be buying it high, you might be buying it low, but you just know you're consistently putting the money in. Whereas if you leverage a lump sum strategy, putting it all in at the same time, you're not sure if this investment is going to be at a higher price point or at a lower price point. But statistically, if we do lump sum investing, 67% of the time it's going to be better than dollar cost averaging. Well, you're talking about dollar cost averaging today, Tremaine. Why would you teach us to do this? Because if you're the type of person that procrastinates, right? So let's say I want to invest, the full amount into my IRA, but I don't have the full amount to do a lump sum, and you continue to save and save and save and save. For many of us, we get a hole in our pocket. And when we're saving, we find something else to spend money on, right? And I think that's what a lot of us do. We think we have to wait until we have X amount of dollars to invest before we do this lump sum. And you don't have to do that. You can invest small increments over time. And that's why dollar cost um Jovia says that's me, right? And that's why dollar cost averaging is good because it allows you to put incremental amounts in to build up to whatever that larger sum is that you wanted to invest. All right. It helps the average investor become consistent and get money invested into the market without trying to wait for the perfect time or the perfect dollar amount to invest. Because for many of us, we don't know enough about the stock market. We don't know enough about reading the charts to know when is a better time to invest in a different time, right? And sometimes we're using it as an excuse, if we're being honest, right? Not to take action. All right. So, more statistics for you. 55% of the US doesn't invest at all, right? And I touched on this a little bit because a lot of us don't think we have the money. There are so many different apps and resources available out here where you don't have to start with a ton. You just have to get started. So if you're watching this and you're in a position where, you have some savings set aside and you should be investing, this is your opportunity to say, all right, 17,000 people have told me that I need to invest. I'm the 17,001 person that has said it, right? It's important that you are investing to help grow your wealth, to build your portfolio. All right. So, what are some things that you can do with this is try not to make it complicated, right? One of the best things that have come out of employer sponsored plans is your ability to just decide, I'm going to invest this amount every pay period, and you get to set it and forget it, right? You don't have to make it super complicated. It doesn't have to be incredibly challenging. The easiest way to build wealth is to do a nice, boring, repeatable strategy. And dollar cost averaging helps you with a nice, boring, repeatable strategy, right? And over time, as you learn more and you become more astute about what opportunities are available to you, then you can get fancy with your strategy. But I'm here to tell you, it don't have to be fancy in the beginning. It doesn't even have to be fancy towards the end. It can be nice and boring, right? It A lot of the flash and like the lights and stuff, people like talking about the sexy stuff, but the boring stuff makes money. you don't have to become a day trader or trade options or do all of this sophisticated investing in order to build wealth. It can be nice and boring and basic, right? You just have to stay committed to doing it. Um, the other thing is sometimes we don't execute because we are confused. And if you know anything about taking action, a confused mind does not execute. So if you find yourself stalling, it's because you're not clear on what it is you're supposed to do. And using a strategy like DCA, where it's like, okay, I'm going to pick one specific investment, a specific dollar amount, I'm going to do the same thing over and over and over again. It's easy to execute on that, right? So it will encourage you to take action because it's very simple. Nice, repeatable, easy process. All right. So that's what I have for you today. I'm going to talk a little bit about dollar cost averaging and helping folks get started with investing in the workshop. So if you'd like to join me for that, for my next workshop, you can comment workshop and I'll help you get started with some beginner investing strategies. Again, this is not going to be advanced. So if you are somebody who is beyond the beginning stages, don't register for this workshop. You're going to be mad. All right. This is for my beginners, folks that are just getting started. So you can comment workshop. You get the link to register for free, where I'll dive into some things to help you with dollar cost averaging, starting your investments, so that you can start to take action, right? Everybody says you need to invest, but what am I supposed to do? All right. Comment workshop. You can join for free. So that was today's question that needs an answer. Again, my name is Tremaine Wills from Mind Over Money. We are on a mission to help 1 million households grow their invested assets to $1 million or more. If you would like to join us on that journey, you can follow on every single social media platform at 1 Trillion Tribe, where we share our progress and our updates. Our community is growing. Oh my gosh, it's so exciting. To date, we are crossing over 80 members who are committed to growing their invested assets. And now we're approaching $5 million invested. Like, that's so awesome, right? Especially for the folks who are starting off at zero. So super excited about the journey that the community is going on. We have a free Facebook group, the 1 Trillion Tribe. You can learn, grow with us there. And I think I said everything I'm supposed to say. Right? If you enjoyed this, tune in tomorrow, 6:30 Eastern Standard Time. Well, I will answer the next question that needs an answer. And have a great night, y'all. I'm about to get ready for our passive income training. So, okay, before I hop off, let me tell you about this. So, one of the things that we do in our community is we teach passive income strategy. So, like real passive income, not start another business, passive income. But one of the things I notice is that oftentimes we don't know the opportunities that exist for us to invest. And so what I focus on is teaching and bringing those opportunities to the community. So tonight in our community, we are going to have a lesson on hotel investing from a hotel owner who's going to talk about what some of the different opportunities are to get into investing hotels, what you can expect the returns to be, like real returns, not the hyperbolic ones where people are like, you can make 17,000%. Like, no, what are the real returns that you can expect? And then present an opportunity for folks to become hotel owners tonight, right? So that's super exciting. And I can't wait for that conversation because there's going to be so many more people building wealth and growing those assets. So that's what's happening tonight. If you get connected with the 1 Trillion Tribe, you'll see all the updates and all the stuff that's happening. So I encourage you, if you want to see what we're building over here, follow, stay tuned. All right. I'll see you guys tomorrow at 6:30 Eastern Standard Time, 6:30 p.m. Eastern Standard Time for our next questions that need answers. Have a great night.